General Motors has confirmed what most of us have suspected for some time now. In fact, Mary Barra has now confirmed this information herself. She noted that the financial arms of many automakers, including GM, count on the vehicle's residual value. But if the value of a sizable portion of the automobiles they produce and sell drops because no one really wants them, the company will incur enormous losses. Taken together with GM's current admission, it's clear that the automaker will have a tough time with this shift, costing them billions of dollars. However, in all honesty, Tesla is miles ahead of the competition. It was just stated by GM not too long ago, and they have expressed their desire and intention to turn a profit on their EVs by 2025. So here's the deal. Before 2025, GM expects to sell hundreds of thousands of electric vehicles at a loss. Initially, they anticipated selling 400,000 electric vehicles in 2023. But industry insiders think that's totally not going to happen, and just a few weeks ago, they reversed course after discovering they lacked the manpower to increase battery production. According to industry experts, GM's decision to rely so heavily on a single battery supplier is disastrous. As a result, they are the mercy of that battery company, a partner in the business venture they have established with themselves. Additionally, GM has yet to learn from its previous misstep in forming a joint venture with LG Chem. In retrospect, the Bolt EV's use of defective LG Chem batteries was a huge mistake. It has also been confirmed by GM at this time that they will not be ending their partnership with the company, and that is a big risk for the business. GM has informed investors that it anticipates a profit from its electric vehicle program by 2025. Furthermore, they hope to sell 1 million electric vehicles that year. GM had previously stated that number was for the United States, but now it says 1 million worldwide. The United States is General Motors' most important market worldwide, and the United States is expected to account for at least 75% of its global sales by 2025. That means they'll produce at least 750,000 electric vehicles in the United States by that year. Now, on November 17th, GM detailed to investors how it plans to pay for investments in battery plants and assembly facilities to produce Ultium batteries. General Motors executives also broke down the company's plan to turn around the company's 44,000 annualized loss in electric vehicle sales in the United States. GM has signaled it is ready to ramp up the production of electric vehicles, and they're doing this with a new battery pack to increase sales and begin reducing production costs. You see, more batteries mean more vehicles can be produced. So, they will soon be a major player in the race to replace gasoline and diesel engines with electric motors. And in all honesty, they have a more convincing argument than Ford. Now, exactly why does it make a better case than Ford? Well, General Motors is more committed than Ford. In fact, they have announced that it will cease production all non-electric vehicles by 2035, and every single one of them will be powered by electricity. There is a 13-year window for them to embrace change and take advantage of opportunities. That's why it's important to note that, unlike Ford, GM isn't making these claims. Ford claims to continue manufacturing gasoline-powered vehicles in the United States until at least 2035. However, the long and difficult path to mass market, profitable EV sales in 3 years demonstrates how far GM has fallen behind the competition. For context, Tesla's net income of $5.5 billion last year came from the sale of electric vehicles alone, plus another $5.5 billion. However, GM is remaining silent on the matter, and if you are a shareholder in this company, that information would be helpful. NIO and XPeng, on the other hand, are very open with their financial data. That's because consumers prefer to buy their automobiles. Thus, considering how much of a loss the companies make on producing those automobiles, experts think you're crazy to invest in them. Now, the centerpiece of GM's plan from last year was to increase revenue to $2.8 trillion by 2030. There are two requirements for this. One way to increase sales is to offer electric vehicles alongside conventional ones in a dealership's inventory. The second is to convince you to sign up for their subscription services. GM estimates the subscription services will account for roughly half of this sum. But many people have doubts about GM's ability to manufacture EVs. There is also skepticism about the potential for profit from EVs and the profit that can be made from subscription services. Now, before we continue, I'd like to thank you for getting this far. And since you're already here, make sure to stick till the end. And so does GM have a chance of catching up with Tesla? The consensus on Wall Street is that they can. According to these analysts, GM will produce twice as many electric vehicles as Tesla in 2029. And an analyst from Morningstar noted that the 2021 Investor Day was a groundbreaking occasion. Although the stock price didn't skyrocket, he explained that this was all for the long haul, and the story will most likely continue until the next major development. GM plans to overtake Tesla by utilizing its extensive manufacturing and supply chain infrastructure. And when it comes to EV components, Hyundai is GM's primary supplier. John Murphy, an analyst at Bank of America, predicted that General Motors' electric vehicle sales could surpass Tesla's by 2025. Even though they really want to make money, General Motors has admitted that they will only be able to turn a profit on electric vehicles at least in 2024. And the fact that they will overtake Tesla in sales the same year they finally profit on EVs is a miraculous coincidence. Wall Street predicts this will occur because by that time, GM will produce more of its vehicles and offer a wider variety of models. These analysts seem to ignore what auto industry employees have to say. GM reiterates that it anticipates the electric vehicle program will begin turning a profit in 3 years, and as a result, the profit margins on battery-powered models will still be lower than on internal combustion engine vehicles. They claim that the current lineup's profits will continue to subsidize the R&D of EVs and GM's annual expenditure of over $2 billion on its Cruise unit. Now, GM says it will detail how it plans to increase the power density of its lithium batteries by 60%. The energy density of these batteries is expected to increase by 60%, and the price will be reduced by 60%. These assertions go much further than anything Tesla has ever said about its 4680 battery pack. General Motors claims it will surpass Tesla. However, it is expected that the price of batteries will be eliminated entirely once the second generation of lithium batteries enters production in the coming years. GM's purported cost reductions appear too good to be true. However, they sound implausible and like they might be exaggerating. And according to the Bank of America, General Motors isn't going to lower its prices to compete with Tesla. And even if they can't match the profits, they should still have healthy margins. And so, if Tesla can pull it off, so can GM, Ford, and the rest. They have simply fallen behind on production, model line, and some 60 other things. So, what do you think of GM's future in the electrified automobile industry? Let me know what you think in the comment section below. And while you're at it, make sure to smash the like and subscribe buttons as well. Now, if you want to know why car manufacturers are switching to EVs, then make sure to click and watch this video right here. And enjoy! And that's the end of this video, guys. See you next time.